All right, in this section we're going to go over the head and shoulders pattern and the inverse head and shoulders pattern. Probably one of the two more common terms you will hear beginning trading in your trading career and education. Of course, this is the pattern that's covered in most books, and along with some other patterns. But this is probably top of the list there. And it's not my favorite, believe it or not. It's a pattern that I want to go over just to show you there's better ways of trading this pattern, better ways of identifying it than the standard head and shoulders, left shoulder, the head, the right shoulder, this neckline, and the breakthrough. Now, this is typical. If this was a perfect world, all the head and shoulders would work out this way. You know, you get a neckline, you get a shoulder bounce, you get a spike up, you come back down, you bounce on the shoulder, and you roll over. But how do you know you're going to roll over on the right shoulder? How do you know you're going to, this is not something else? And so many times this year and last year and since the last 8 years, this market has continued to break higher out of head and shoulder patterns. So I'm not a big fan of head and shoulders. I want to show you a better way of identifying them and how you should trade those. The inverted head and shoulders is the same thing, all right? So here's your generic look at a head and shoulders pattern. Very simple, but we have to be more realistic in the way we look at things and the way we see things. Here's our first look of just a chart. And why I wanted to put in the chart here is this upward trend line, which I think is key to identifying a head and shoulders pattern. Now, the head of any head and shoulders pattern, remember, head and shoulders and inverted head and shoulders are reversal patterns. They're not continuation patterns. These are strict patterns that are going to show reversal in trend. So that you must have a trend intact to really have a head and shoulders or inverted head and shoulders. And so I love to have this underlying trend line point out the left shoulder. You have a trend line. Now in this case, all right, you have a series of higher lows and higher highs. So that one of those higher highs is going to be shoulder. The head is going to be the reversal pivot it's always going to be the highest part of the channel. Remember, this is reversal, so it's going to be a change of trend. So the head is going to be the highest part of the pattern before it starts to roll over. So if you do have a rising channel like we do here, and you have a bounce off of it, and you push up a little bit higher, you can't really determine this as a head and shoulders yet, right? You need to have that right shoulder break down, and for that right shoulder to start to break down, you have to have a right shoulder. So what typically happens is we start to get a change of trend right away. So you should be able to identify a head and shoulders pattern even before that right shoulder shows up. As you can see, we actually start to see a breakdown of the trend line, and then what happens is typically we bounce, but we don't bounce back up to the level of the head, and we usually measure this with our stochastics too. In some cases, there's a trend line underneath us, and sometimes we'll bounce up to that trend line, a retracement trend line, and then roll over. In either case, we usually come back up to the left shoulder's level, but we don't have to. We could stay under it also. But it's important to either be level, even with it, or underneath it. In this case, it's slightly underneath it. And the other key things will be watching those stochastics as you get up here, and I'm going to show you some examples of this. But this is this is your underlying trend line. This is your rising trend, and this is the break of your trend, and this is going to be the head here. So once you have that, you go back to your last pivot. The last pivot is a significant little turn in this uptrend. Here's a pivot. Here's a pivot. You can see that little pullback. So your last pivot is typically that left shoulder. Some cases go back a little bit further. You have double shoulders and stuff. But again, like I said, it's just the way you interpret it. The whole pattern is a pattern reversal, and it really comes down to the trend line, the volume, and actually the rotation of the stochastics. You're going to be able to tag that. All right, here's another good example of that. The first move up, the first shoulder, the pullback, the established trend line underneath it, the peak, which is the head, to come back to that trend line, that breakthrough of that trend line, and now we have that first bounce. And that bounce lots of times will come underneath. I like it when it comes underneath that trend line and attacks that trend line, but fails to get back above it, causing that right shoulder to come into effect. So, when it comes to the necklines, you can have either a straight standard neckline, or you can have that pullback. You can have that rise in neckline, which is kind of a secondary trend. But as you can see, this kind of eventually just kind of rolls over and stuff. But again, the key here is understanding the first move up is a breakdown of a rising channel, and then a retest of that trend line brings us back to that right shoulder. Now, I said before, normally we want to have it above or actually below this left shoulder. Depending on where this trend line, sometimes you could move up a little bit higher than the left trend line. It's more important to stay below the head here. but also just kind of respect that retracement trend line. So we could actually move up to it a little bit higher, as long as we hang underneath that retracement trend line and stay underneath the head. That would keep this valid. Here's a look at the inverted head and shoulders bottoming pattern. You can see this downward channel line. The channel, you can even put a channel line down here and make it a full channel, but the important part is the test of it, the pull back. In this case, an inverted head and shoulders, the low part will be the head. The push back up, we broke that trend line, which was an established trend line, and then we pulled back to it, put it in that right shoulder. Remember, a trend line break is a change of trend. So if we have an inverted head and shoulder pattern, it's a reversal pattern, the first break comes to the trend line. The right shoulder is going to be formed on that first pullback, where we're going to look back at that left shoulder area, but we're also going to pay attention to that trend line retracement. From that point on, we're going to look for this to hold that and then start to break out. Now the neckline again, you can start put some pivots in there. It doesn't have to be a perfect straight across trend line. No way. I'm actually favor the slanted trend lines a little bit better. But this is, again, just as a textbook example of what you want to look for in a head and shoulders pattern. More than just looking for it, you'll see it much easier when you understand that these things happen in a trend. And think about, what is a head and shoulders pattern? It's a reversal pattern. And for a reversal pattern, it has to be at the highs or it has to be at the lows. It can't be mid pattern. A lot of people look for head and shoulders patterns on a daily, but it might be in the middle of a big move up, and or might be a higher, it just has to be at the top or the bottom of the range, depending on the time frame. All right, this part I want to show you how to do a scan for some head and shoulders. Now, lots of times we run across these; they look like it. Remember, we're really looking for channels to identify those head and shoulders. Now, I use FinViz a lot for the screener. Other than having my own screeners, sometimes if you don't have that, FinViz will do the job for you. FinViz.com. If you go to the main page, there's a lot of ads on it, so the ads pop up here. I'm going to show you right now. Here comes the ad right there. But this is what the front page looks like. We're going to go up here to where it says Screener. I'm going to click on that. Another ad's going to pop up. Hold on. And then right up here, you can see Technical in the middle of the bar there, Technical. And we're going to go to that. And then right over here, as another ad pops up probably, you're going to see Pattern. And you can click on that. You'll see wedge, triangles, channels. Channels are really good. Wedge patterns are really good. Down on the bottom, you'll see head and shoulders, inverted head and shoulders. So just show you what you get for something like this. And when I do my scan like that, you can click on that. I want to go to market cap next. I'm going to click on market cap, and I'm going to go to the highest market cap down. So I change that market. Now I have head and shoulders screened as the filter, everything. And these are the stocks that are showing up as a head and shoulder filter. Now I'm going to click on charts here. It's going to give me just a good view of a bunch of charts that are falling into that head and shoulders pattern. Now, this is an automated trend lines and automated pattern recognition site. So a lot of them are very sloppy. They have a left shoulder, right head, right shoulder. But just remember the criteria here. The head, the most important part is the head is the top of the pattern. In all these cases, the H is at the top of the pattern. It could be very sloppy by the time you get to that right channel over here. It's very hard to see. But if you would have gone to each one of these patterns, and actually we're actually looking at, that's an interesting one right now that we're looking at. Let's see if I can bring up, another big ad. Oh, that's an ad, not an ad. That's an ad for the website there. It's weird. Sometimes I click on the chart here to get a bigger chart. All right, in this case, what I wanted to show you, you don't see the underlying trend line here, but you could see that if you connected these tops up here, you see a nice strong line. Even if you connected this pivot down here to this pivot, you had this rising channel. It's almost a wedge pattern. I can't draw the trend lines on this chart. I can bring it up on another chart here. All right, here it is. So this is the IFF. You can't see anything here. But then again, what are we looking for? We're looking at the high. So let's mark off that high area, which is right there. And then we're also going to look at the trend. Now, the trend is something that we have to just, you're going to eyeball that. You're going to take some of those pivot areas. You're going to put them in. When I'm talking about pivot areas, I'm talking about this low here, pivot low here, this pullback low here, and then I'm just rising it up. So it's definitely a rising channel, higher lows. And you can even put a trend line on top, but I'm not worried about that. I'm worried about that high and that breakdown. So once we establish that breakdown, then it should change the trend, and we're looking for that retracement back up. And that retracement came up close to that retracement trend line, but the key was, in this case, the retracement on the stochastic. And that's what I normally look for. I look for that rotation up here on the stochastic to get back into an overbought level, and for that overbought level to hold underneath that trend line, and definitely underneath that high. So that puts in that right shoulder. Left shoulder, again, they have it. They identified left shoulder. I think it was probably way over here, and that's tough to read into. But I would, then look at this as this little dip here. The possibility of that shoulder coming in. There was a gap over here, and then right here again. So, most of the head and shoulders patterns that you're going to see are going to be very sloppy. They're not going to be any textbook that you see in the textbook. But it's going to be, they're going to be the combination of that trend breakdown, retracement, right shoulder being put in, and then the breakdown. That's a head and shoulders pattern. And the inverted head and shoulders, the exact opposite, like we showed you. And it all comes back to channels and stochastics. The head and shoulders pattern, yeah, you could call it that, but it really is a change of trend, and could fall into any other category: a breakdown, retest of the trend line, and a failure. So it's a great pattern to look for, but I wouldn't get so excited about it and call it a head and shoulders top. You look for the rising channel. Sometimes you won't see the breakdown of the channel. People will say, it'll come back down to the channel, hold that channel, and then bounce off of it, and then roll over. You really got to wait for that rollover to happen, the break of the trend. I hope that went over a little bit better on the head and shoulders pattern, the inverted head and shoulders pattern. It's a good pattern to watch for, but I would, this is the way I would approach finding those head and shoulder patterns and dealing with them. The head and shoulders pattern works well with what we call a measured move, and a measured move is like a kind of a prediction, a technical look at where a pattern should play out to. Meaning that once a pattern breaks out or breaks down, there is a level that we could look for a reactionary trade off of. Now, a head and shoulders, again, a kind of a generic look at it: left shoulder, head, right shoulder, break of trend line, the breakdown of the neckline. Now, just kind of an overall rule. The head and shoulders, the distance between the head and the neckline, that distance, when that neckline is broken, represents its profit potential or its target, to go the same distance. Not a big fan. Of course, we use a lot of different things here, especially with our rotations of the stochastics, but it's something I want to pass on to you because we hear about it a lot, measured moves. Let me see if I can give you another better example of that. Currently, as the markets are playing out, there's not many of these patterns around, so I'm taking a lot from my archives. And in this case, you can see this is another kind of a generic one. You have to have that downtrend. If you imagine that trend line that came down on the peaks of this downtrend, you'll see that once we broke out of it and pulled back to that trend line, if you could actually put a trend line, I can't here, that would be your shoulder here. The neckline here really comes into where that shoulder, that first pull back to the shoulder is. You can see the neckline in this case is pretty clear. And again, the measured move here is from the head to the neckline. That distance between the head and the neckline, extended from the neckline up, is where it is. So that would actually go from the head to the neckline to the same distance that it has about there. That's what is one of those examples, and that's on the inverted head and shoulders pattern too, which I actually like the inverted head and shoulders pattern a lot. I like that we had a channel line breakout, the pullback, the retest, and the continuation. I might call the channel breakout and the retest. Like I said, you probably could see a head and shoulders pattern in a lot of these reversals. And the most important thing, the reversal here, the head is a reversal. The head is a reversal on the on the bearish one and on the bullish one. But you can't confirm that until you get the break of the trend line, and the retest, and then the follow through. Here's another little example: neckline breakout between the the neckline. In this case, it's a downward channel, and again the right shoulder being put in here, and the breakout of the channel line and the measured move up here. When we consider channels, we also consider wedges. Wedges are another important channel, part of a channel. I consider in the channel family. And since being in the channel family, we're going to have the same rules here. And then again, you can see this rising red wedge. You can see the upward trend line. It's the same thing is going to work out, and they work out just as well here. The head being the top of the channel or the top of the wedge, the breakdown, the retest, put in that right shoulder, and the follow to the downside. This is really great because I think that the wedge pattern even is easier and a much easier pattern to trade because of the timing. We're able to time where this pattern breaks out 65 to 75% of the pattern, and it's a high probability setup here. And applying the head and shoulders technique on our understanding about head and shoulders, it's very easy to read into this and know exactly where you're going to go with your measured move. All right, so that's a great example also. Again, great in channels, head and shoulders, inverted head and shoulders, definitely worth watching. But they're very similar to the channels, and sometimes they cross over into that channel. You can call it a channel breakout even, or a channel breakdown. So that's it. Hope you enjoyed that, and more to come.